Crypto Kids, welcome to an emergency live stream as the price of Bitcoin capitulates below the April 2025 lows. We are here streaming why exactly this is happening and what should we be expecting next for Bitcoin's price action. Guys, if you are tuning in, make sure to destroy that like button. It's going to be the only thing that keeps our morale high. If we don't hit the likes, then sadly, the rumor is Bitcoin will continuously drop more. I didn't say it, they said it. So, guys, welcome. I know a lot of you are concerned. We can see that in the past 24 hours, Bitcoin has liquidated $250 million worth of long positions, Ethereum $240 million. And then we have Hyperliquid liquidated about $40 million. The real-time liquidations are kicking in as Bitcoin's price goes to the downside. You may be asking, CryptoKid, what is the fundamental reason that this is happening? Well, guys, simply, it's just that we're in a bear market. I mean, this isn't the first day that we're making bearish content about Bitcoin for the short term, because in the long term, I'm a believer that it will go to millions of dollars, obviously. But, you know, for the past couple of, I would say 2-3 months, it was rather obvious that we would be going into a downturn. The only thing that I missed, and I'm very upset that I did so, was I expected a 200 daily moving average retest into Bitcoin, which I'm not saying isn't going to happen still, but I did expect it to sort of take place before we saw the drop, which didn't happen. And that's okay, because sometimes you get it right, sometimes you get it wrong. We got the exact timing of the top correct. We almost got the price correct too. I was calling for about 130 to the 150Ks for Bitcoin, if I'm not mistaken, but at least that lower range was 130, 135. So we got the timing correct. We got almost the price level correct. It's just this annoying 200 daily moving average, which kind of doesn't make me sleep at night. It's really annoying. But it's currently sitting at $103,000. Okay, and I think the sort of probabilistic move of us getting back to that 100K territory, obviously, if we do get to it, it won't be at 100K. We'll probably be drifting around $97-ish thousand. That will all be determined by how this candle closes below these April, it has went below these April 2025 lows, which we did, again, expect it to happen. It's just, I wanted to see Bitcoin hit that 200 daily moving average first, and it's kind of annoying me. It is what it is, though. Trading at 74,955. Now, we went all the way down to 72.4, so we took out those lows created in April, and we've confirmed that lower low and established a bearish trend officially on the weekly time frame. So for anybody that's been doubting the bear market, I mean, we've been saying that that Bitcoin was in a bear market for a while now. But for any of the doubters that still don't believe that Bitcoin is currently within a bear market, well, there you go. Now you can't argue with it, because from a technical perspective, theoretically, right, we have created a lower low and also a lower high. So this is officially bear market, guys and girls. Okay, so now that we've sort of covered the immediate price action, let's quickly go into why this is happening. Let's go to the Crypto Kids Twitter page. This was funny. I posted, most people lost money during the crypto bear market. I lost my childhood. I mean, guys, I've been waiting for the altcoin bull market ever since I was 12, and it didn't come around, and it's annoying. It is annoying. So Bitcoin is dropping because we had the government shutdown fears escalate. We also had some more tensions with regards to Iran. I'm going to quickly pull up the BRICS news. If you're in the Telegram community, I shared it the moment it was public information. Let's go to BRICS news. They posted the latest. You can see U.S. military shoots down Iranian drone near a United States Navy aircraft carrier in the Arabian Sea. It's just a very unfortunate one, and obviously it sort of creates the predictions and speculations of worsening geopolitical tensions, and Bitcoin is always in the forefront of fear. So that's why you went down to 72.4, and we were already going down because of government shutdown annoyance, I'll like to call it. And then 23 minutes ago, we got that signed. So the fiscal budget got signed, and it saved Bitcoin, and now we're back up to 74.8. So those are the two specific breaking news that is leading to Bitcoin dumping and then moving back towards the upside. The S&P not taking it well too. I don't like this S&P price action. To me, it looks incredibly toppy. I absolutely hate it. And if the S&P goes down into a bear market, then obviously Bitcoin will follow too. I don't want to just go around the main objective, right? We're sort of, the main objective is what will happen to Bitcoin next, in the opinion of obviously Crypto Kid, who's been in the markets for now 6 years and has seen the bulls and the bears and, you know, all of the emotions, and has made money and has lost money. Let's see what I personally think is going to happen next. Drumroll, please. And it is this chart. I mean, we've been showing this chart for a while. We even spoke about it with Ben Cowan. I made a video. This is obviously Ben Cowan's Into the Cryptoverse platform. I've made an interview with Ben. I think it's been 2.5, 3 months now. We can check, and let's see how long ago it was. Popular. It was one of the most popular ones, if I'm not mistaken. There it is, 2 months ago. 28,000 views. This was on November the 10th. So we said Bitcoin big crash incoming, warning. This was when Bitcoin was trading at 101,200. And we must have brought up that QT ending bear market. If not in this interview, then for sure in other videos. Yeah, I don't think in this interview, but we were sort of calling it then. And unfortunately, we got 530 dislikes because people just don't want to accept that Bitcoin is going to come down, right? So it's fine. It is what it is. But going back to the QT ending bear markets, we know that monetary policy, which also refers to the business cycles, is closest to the 2019 price action for Bitcoin, where in 2019, you had a top 2 months before quantitative tightening ended. I'll take you back to 2019. Let's go back in time. Here it is. So there, this mid-cycle top took place 2 months before quantitative tightening came to an end. So this was QT end. That was 2 months before you saw the top. And Bitcoin just sort of went down until about, I mean, even into increasing liquidity, you were still ranging. And then about 6 to 8 months after you saw, this was called the, what was it called? This was non-QE QE. After that began and you started to see that escalation in liquidity, you're still looking at about 266 days before Bitcoin takes off. So here we got the same situation. 2 months before the end of QT, Bitcoin tops. And we've seen that non-QE QE beginning. And hopefully we will see an escalation in the balance sheet. It's all a bit up in the air with Kevin Warsh because we know historically that he doesn't like to expand the balance sheet. That's still in a little bit of a is it going to happen? Is it not going to happen type of thing? But when we look at these two charts, I mean, it's just sort of went perfectly, right? It's went perfectly. We've been following it perfectly. Another chart that I've been showing in videos before was the year-to-date ROI, and taking a look at this cycle and comparing it to the midterm years. We know that there is also the electoral cycle in what affects Bitcoin from cyclicality perspective. The American presidential and congressional electoral cycles also affect Bitcoin. And it happens to be that in every midterm year, which is what we are in now, you tend to see Bitcoin go down. So when we look at this, again, you're playing it perfectly. So it's just you know, we looked at the facts, we understood the facts. I sold a lot of my risky holdings. Right, I sold a lot of my risky holdings, a lot of my altcoin holdings when Bitcoin did this. It was around here when we went to $305,000. That's when I sold a bunch of risky assets. I actually did reduce my Bitcoin spot holdings by about 15-ish%, and flipped a lot into stable coins. So since then, in my personal portfolio, I've just been more cautious, and we've also highlighted that it doesn't make sense to be optimistic at this current market stage. It's much more sensible to be more optimistic. So when I look at this chart, it shows that prices should be going lower, and that's what I would be expecting for another few months. I don't see Bitcoin going to 20K or 30K like what some people are projecting, but is the mid 60s possible? Yes. Is 71K possible? I mean, we've already tested now. It's a very important retest here. right? And actually, look, in the very, very short term, I'm still, because of that support line, I'm still opportunistic that, we're optimistic that we will go up and at least close the CME gap at 83. 93K, we should go and close it, but let's see about that one later. The 83.71, we should go and close it. And we are at just tremendous levels of support from March of 2024, April of 2025. This could be the bounce, but am I longing? Maybe like a 2x leverage long just for the gamble trades could be on the horizon, but it doesn't make me so excited to go into long positions here. The CME gaps will close eventually from where I'm sitting, but it just, I wouldn't be long in this more in this. I mean, with Chris, we spoke about a strategy, right? And that strategy, I was thinking of implementing it today, but I was just so ridiculously busy. Michael Turpin, the legend himself, invited me to speak at his event, at his birthday party, which was awesome. We sort of debated Bitcoin versus gold there, and I've not slept in like a day, so I couldn't start implementing that strategy. But what Chris said does make sense. I will do it tomorrow. Okay, I will do it tomorrow. We will start doing that longing strategy tomorrow. And yeah, I mean, it just feels wrong to long. That's why I said what I just said 2 minutes ago. And then I remember Chris's strategy. I'm going to give it a try. Okay, I'm going to give it a try. I think for everybody confused about what that strategy is, go back to the video that I recorded with Chris. I posted it a few hours back here on this channel. I think that the mid 60s look are possible. I think very much on the horizon. 69K would be a great level to come down to, and obviously if we test 69K, then I think the probabilities that we jump into those mid 60s make sense, but we cannot time the tops and bottoms perfectly to the dollar. It's just not going to happen. It's something that you and I need to accept. We cannot predict the exact top and the exact bottom for Bitcoin. What we can predict is, do we believe in this asset in the long term? Are you a bull on Bitcoin in the long term? Do you believe in Bitcoin in the long term, or do you not believe in Bitcoin in the long term? If you believe in Bitcoin in the long term, then simple. You can dollar cost average. You can dollar cost average into Bitcoin from where we are now and potentially buy all the way down to the 200 simple moving average. I think the legend, the moon, and Ben Cowan are watching, which is just ridiculous. Like, it's honestly insane. I would have never thought when I was 14 that Carl and Ben Cowan would be watching my show. It's insane. Thank you so much for watching. And I apologize because, again, I haven't slept in a day. So I'm a bit on the tired side of things. So I apologize if I'm a bit more slower in my communication. And when I'm highlighting, when we're looking at, since Ben is watching, we went over the QT ending bear market. Ben also pointed that if we break this low, then we will likely come down to the 200 simple moving average. I think it's a very good take. I think it's a very, very good take. Why is that take good, in my opinion? Well, on Ben's beautiful Twitter page, which all of you should go ahead and follow, he showed us what happens when you break below the other two. There it is. The other two simple moving averages. This should be the 50 and something else. This is, what is it? This is the, I forgot which the other two were. I think one of them is the 50, and then there's another moving average. But when you break those, you have always tested the 200 moving average, historically speaking, for Bitcoin. So back in 2015, when Bitcoin had its Q4 top, you went down to the 200 moving average. When Bitcoin had its Q4 top in 2017, you went down to the 200 simple moving average. You even tested the 200 simple in the COVID crash. The same thing happened in 2022, but the difference was you broke through it this time. And fast forward to where we are in this cycle, again, you're breaking below those two critical moving averages, and the 200 simple is trading at the 58K level by the time we get to it. So I think we will get to it. I don't think we will break below it like last time, simply because we topped out on apathy and not euphoria, and we didn't see that much retail capital flow into markets. Could I be wrong? I could, of course, be wrong. This is just what I'm seeing right now. And if it changes, then obviously we'll do an update because we're here every single day. This moving average will continue going to the upside, okay? So by the time we potentially test it, it will probably be sitting at the mid 60s, which is where I'm anticipating Bitcoin to go down to. And I need to reemphasize this. It's a game of macro. Do you believe if you believe in Bitcoin in the long term, these are all good buying opportunities. If Bitcoin decides to bottom out in the mid 60s, again, that's like a 15% drop. So you're not going to time the exact bottom. If you believe in Bitcoin in the macro, I think it's a great time to be buying. It's okay. Let me read Ben, because Ben is commenting. So Ben said, when moon? Well, hopefully we start to go back up in 2027. And then Ben said, I hope we bounce here soon, because if not, this year is going to really suck. I do think we go to the 200-week SMA, but a bounce would be nice in the short term. Okay, so look, this is an important one. So Ben, you still think we will go to the 200-week SMA? Hopefully, that would be amazing. Like, did markets give us a huge head fake? Like, it would just suck, Ben, if, let me switch back to the chart. I don't know if you're still watching. Hopefully you are. But like, take a look at the Ichimoku, for example. I discovered this today. So with the Ichimoku, it's basically the 200 daily moving average. It's the same thing as that one, with where we saw that retest in March of 2022. But let me try and explain what I'm talking about. Let's go to the daily time frame. Daily, where's the daily? There it is. Okay, right. So in the last cycle, for everybody else that doesn't know what's going on, the 200 daily moving average for Bitcoin is very important. All right. So in every single cycle, after you establish a Q4 top, again, shout out to Ben, because this is where I've learned this from. He's the master. So Q4, even in the Genesis cycle, you see the top, and then Bitcoin retests the 200 daily moving average, and then you see the capitulation. You fast forward into the 2017 top in Q4. Bitcoin drops, but it does see a retest, in fact, 2 retests to the 200 daily moving average before seeing the capitulation. And then you go into the 2021 Bitcoin all-time high. And in this Q4 top, you go down, you test the 200-week moving average, and then Bitcoin heads to the downside. Okay? So what me and Ben both anticipated was that we see, I mean, what I anticipate, I'll speak for myself, and then obviously you can go watch Ben's videos to see his takes. But I sort of thought that we could go to the 200-week and then get the capitulation, but it's interesting that Ben says that we can still go back up to it, which would be amazing. We still have those 2 CME gaps, and if we do see that bounce, then I would be optimistic of a retest there. But look, the Ichimoku is what I wanted to show you. So with the Ichimoku, in the last cycle, the 200 daily moving average and the conversion line and the baseline of the Ichimoku, they simultaneously occurred at that same exact price level. That's where Bitcoin faced the resistance and then got rejected. But when I look into Bitcoin now, like, what if this wick, right, was the trap? Like, maybe everybody was wanting to short at the Ichimoku conversion baseline crossover at the 200 daily moving average, and then markets were like, nope, history is going to repeat. But not exactly, it's going to rhyme. So we're not going to make it retest it perfectly for you. We're not going to lay it on the table in front of you so it's, you know, it's nice and obvious. We're just going to put the price up to 97K and then we're going to dump it. That could have been what, that's what happened. But the ultimate question is, will Bitcoin rebound? And just to say again, look, we have those CME gaps. 97% of the time, these CME gaps fill. The first one is at 83K. The second one is at 93K. And if we do end up closing them, then both the Ichimoku conversion line and the baseline and the 200 daily moving average are basically going to line up at those price levels. And if we do go there, that's when I'm going to go short. But for the time being, I'm kind of being a bit more cautionary with what I do, and I just want to be a little bit more observant, and hopefully that makes sense. And if you're looking for a place to trade, because you may have different opinions, you may have different takes, you may want to jump in now, you may want to short later, you can check the links in the description down below to get the best bonuses if you want to do the trading. Before I go back into the comments, I want to give some commentations on Ethereum, because with Ethereum, we highlighted this head and shoulder on the daily very nicely. Apologies for the messy charts. So let's get rid of some things. So we had the head and shoulders that was obvious. We spoke about it multiple times. I can even go to my Twitter and show you that we had that head and shoulders. And I'm doing this just to like make sure that people don't think I'm lying or whatnot. I want to show you the evidence behind what I'm saying. So here we highlighted the head and shoulders. I said that this could result to a dip towards 1.9, and in the videos I was certain with my tone that I think we will drop down to the 1.9 and 2K levels. Why did I say that? Well, it's a macro bearish pattern. It's as textbook as it gets, and I think the 2.9, the 1.9 to 2K is a good level for Bitcoin, for Ethereum to bounce from. As when you jump into the weekly and you zoom out, you have a beautiful ascending continuation pattern, and the support line lines up at those regions, right? I'm still bullish on Ethereum in the long term. We have a great array of bullish fundamental factors for Ethereum particularly, such as tokenization, stablecoins, DeFi, all happening on Ethereum. So when I look at it from a fundamental approach, tokenization, whatnot, it's all going to be on Ethereum. I'm quite bullish on it, and we've seen the ISM do well yesterday. It came above expectations. I commentated on it last night. We're going into an economic expansion. This is the highest pace growth for the ISM since 2022. And whenever the economy goes into a big expansion, if we take a look at the price of Ethereum, you will notice that Ethereum and altcoins, there we go, Ethereum and altcoins, they experience euphoric tops. But this is not something that's going to happen tomorrow. We need the economy to expand first and reach the near 50, 60 levels. And then there's about a 6-month lag, and then Ethereum and altcoins catch up. That's what happened. ISM went up. 6 months later, Ethereum catches up. So does the rest of the altcoin market in 2021. And the same thing happened in 2017 too. What I'm very upset about is Tom Lee, because Tom Lee is losing quite a bit. He's the largest Ethereum institutional holder, and he's down a lot on his Ethereum purchase. So I do feel bad for the guy. I think he's down around $7 billion. Ridiculous. Hang in there, Tom Lee, because I think you're going to get it right. We just need to be a little bit more patient. Okay, back into the comments. Okay, look into, Ben says, look at Bitcoin USD, the Bitcoin dominance. All right, okay, Bitcoin USD to Bitcoin dominance. Let's do that. Like, I just want to say what an honor that Ben is watching my stuff. Like, insane. Bitcoin USD, Bitcoin dominance. And then Carl, I saw your comment too. I'm going to get to your comment. You said we're going to close the CME gap. I think we are close to the bottom now, CME fill, and then upwards. It could very much be the case. Oh. Bitcoin USD, and then USDT. Sorry. USDT dominance. Yeah. Well, firstly, let's show the USDT dominance first. This was something we shared again a few days ago. I think we both noticed it, Ben. And it's that in 2022 to 2023, you see a triple top in the USDT dominance. So USDT dominance looks at how much circulation in terms of a percentage of the entire sort of crypto market is within USDT. Ben, you went into USDT plus USDC in your videos, but we didn't see that beautiful triple top like we saw it on the USDT dominance. So you had a triple top between 2022 to 2023, and that obviously led into Bitcoin seeing a big appreciation to the upside because people left stable coins and they put it into Bitcoin. Think of it as the balance sheets of a Federal Reserve. When they print money, people take that money and put it into assets. That's the same sort of concept if you want to imagine it as an analogy with stable coins. And I can show you the Bitcoin price as the USDT dominance fell, the price of Bitcoin went up, right? So now we're seeing the kind of inverse of it. You're getting a triple bottom where people were in stable coins, so where people were in Bitcoin and other altcoins. And now as we break above the neckline of this triple bottom and we're seeing an explosion to the upsides, people are leaving Bitcoin and altcoins and entering back into stable coins. And that's probably going to lead into a bit of a prolonged continuation to the downside. So when we take a look at the midterm years on Ben's beautiful Into the Cryptoverse platform, you can see that in midterm years, we continue falling from here until about another couple of months, we should still be in a downtrend. And yeah, I mean, that's probably going to coincide with stablecoin dominance increasing with that very powerful, very strong triple bottom. But let me go into what Ben asked me to go into, which was BTC USD and then USDT.D. Okay, so this is a new one. Uncle Ben, what do you think about this? If Uncle Ben is watching, what did you want to point? Okay, let me know if you're watching, and I'll try to deduce it myself as well. Okay, so here what we can establish is, so this is Bitcoin's price. I wonder why Ben wanted me to take a look at this. This is Bitcoin's price against the stablecoin dominance, right? So let's try to figure this one out. And then Ben can maybe, if he's so kind, he can leave a comment. All right, so I see clear support at 8,682. But what does that mean? I mean, that would correspond to Bitcoin, I guess, falling down to 49K, because that's where the ETF hype was. And then you saw the drop to 49K as well when we had the August flash crash from the Japanese yen carry trade. So, Ben, are you trying to say that we're going to come down to 49K? Because if that's the case, I'll be very upset. I'll be tremendously upset. Because that would mean, I mean, look, to be fair, I was chatting to someone at Michael Turpin's birthday, and I said, look, dude, absolute worst case massacre disaster scenario would be 49K. And from an all-time high, that would be a correction of 61%. And it would follow in line with, you know, the historical diminishing drops of Bitcoin. In 2017, you dropped by 84%. In the Genesis cycle, you dropped by around 88%. And then in the last cycle, from all-time high to low, you dropped 77%. So you know what? The returns to the downside, so the losses, are also diminishing. Just like how the gains are diminishing, the returns, the losses are also diminishing. So from here, from the all-time high to 49K, that would be a 60%-ish drop, right? So it would be standard. It would be completely standard for Bitcoin to do such thing. And from where we are now, all the way to 49K is a 35% drop. So if you're thinking of allocating into Bitcoin for the macro, here's what I'm doing, or here's what I would be doing, and I will do it. I mean, I buy Bitcoin every day, so sometimes I decide to weight it a bit more. So if I'm feeling like we're closer to the bottom, then I'll try my best to put a little bit more money. So it's not perfectly the same quantities DCA'd in. Sometimes it can change based off of my sort of cyclical analysis. But that's a 35% correction from here. So if you put 10K now, then and Bitcoin goes down 35%, then you're going to be sitting at a $3,500 nominal dollar loss, hypothetically, once Bitcoin goes down. There are not many people can manage the emotions of being down so much, and most people, when they are down so much, to not let their money go to zero if Bitcoin goes to zero, because that's how people think. If Bitcoin is crashing, then they think it's going to go to zero, so they sell when you're closer to the bottom. Like, some people cannot manage those losses. So what I would be doing is, first of all, get rid of the emotion, understand that Bitcoin is here to stay in the long term, understand that quantum computing is not that big of a risk as people portray it to be, understand that Epstein is not Satoshi, yada, yada, yada. When you take all of that aside and consider that money is going to zero, fiat is going to zero, the trust in the elites and the institutions are going to zero, and that Bitcoin is the solution, you will get that, okay, first, if I lose 35% in the short term, it means nothing, but I can just add a couple of buy orders, you know? I could buy a little bit right now at 75K because we're bouncing a good support. Then I could buy a little bit, let's say, at 67.5K. Then I can buy a little bit down at 55. Then I could buy some at 49 too. So you would have dollar cost averaged your entry without having FOMO of selling or buying. And once Bitcoin does decide to see a reversal to the upside, which I think it's going to happen, then great. You know, you wouldn't have panic sold, you wouldn't have panic bought, and you would have actually ended up making money. And if you ask Da Vinci, if you ask anyone, they'll tell you the same thing. The best way to get rich with crypto and Bitcoin is to buy up over time and try to hold it for as long as you can. Okay, Ben said, looks like an oscillator going back to like 2015 with occasional deviations to the upside. Zoom out, you can see it has been good for nailing all tops over the last 10 years. Anytime we get to these levels or slightly above, it was always the top. Zoom out more. Okay, cool. Let's do that. Bitcoin USD. Dude, this is so cool. I feel like my professor is, showing me the way, and I'm just sort of like, it's cool. It's so cool. Okay, Bitcoin USD, and then we do USD.T. We did that wrong. USDT.D. Okay, so let's try this again. Oh, wow. All right, I didn't see that. Okay, now I see what you mean is an oscillator. Cool. Let's overlay the price of Bitcoin just for context. And then we can get rid of the Fed balance sheet to not get confused on the x-axis. All right, let's put Bitcoin on the log scale. And when we overlay these, what are we searching for now? Let me go back to Ben's instructions. So Ben said, looks like an oscillator going back to like 2015 with occasional deviations to the upside. It feels like an exam. Zoom out, you can see it has been good for nailing all tops for the last 10 years. Anytime we get to these levels or slightly above it, it's always the top. Zoom out more. I swear it feels like an exam. Okay, I guess another thing we can do is to figure it out. We'll put a trend line there. The trend line is at 10,180. I need to, how can I do this to scale? Let's do this to scale. Bitcoin USD, same scale. But that's going to go away. Great. Okay, I'm officially confused, Ben. I'll just go with what you're saying. I trust you. Okay. Basically, anytime the ratio hits 30,000, the top is within 1 month. Ah. Okay. So when we take a look at the tops on this oscillator, and then we put Bitcoin overlaid onto it. So whenever we reach the 30,000-ish areas, Bitcoin is the top. But what about but what about these ones, Ben? But I guess stable coins didn't really exist in the Genesis cycle. I mean, it didn't exist in the Genesis cycle. And then in 2017, it wasn't such of a popular thing. Stable coins only became popular in the last cycle. So do you think with only 2 cycles worth of information, it's still like applicable that 30 is always going to be marking the top? I don't know. Let me know what you think. But it's interesting. It's interesting for sure. I really liked your chart on SPX and gold. Yeah, this was a fantastic chart, dude. Let's take a look at what it's doing now. We can go to the monthly. And then we can put US recessions. Please, guys, if for some reason you don't follow Ben, go to the live chats, click on Ben's icon, and subscribe. He is the best analyst in crypto, period. Okay? There's nobody better. That's it. That's the fact. US recessions. US recessions. I should have named this stream Bitcoin Cliff Dwellers. All right, so this is looking at the S&P valued in gold. Now, whenever, according to Ben, and it's kind of true, I mean, it is true, whenever you break this box of support, it's not good. Okay, there's a much more increased chance that the economy goes into a recession following a breakdown. For example, in the 70s, right? Gold the S&P valued in gold experiences a breakdown, and then the economy goes into a recession. Same thing happens in 2008 in the financial crisis, and these are all big crashes, right? Once the ratio between S&P to gold falls below this box of supports, you go into a recession. And another time it happens, I guess, yeah, those are the two major instances that it takes place on. And currently we saw a wick already. I'm not a fan of what I'm seeing on the S&P 500. We had a huge rising wedge, and then we got a retest to its prior support, turned into resistance, got a rejection. It gives me vibes of the NDI. Was it the NDI? No, it's the DGI. Dow Jones in the 2000s during the dot-com bubble. This is also quite toppy. I mean, this is a classic toppy pattern. Let's go to the 2000s, back to when I didn't exist. 2000. Okay, so here, was it the Dow? It wasn't the Dow Jones. What was it that we highlighted? I forget now. Again, I apologize. I've not slept in a day. Okay, so but there was a chart that we looked into. Was it the NDX? The NDX. I don't think it was the NDX. No. Anyways, in the 2000s, the markets, they had a similar rising wedge, retest to its support, and then rejection to the downside. That's all I was trying to show you. It failed miserably. Okay, I'll stay on for a little bit longer, and then I'll call today because I need to sleep, guys. I honestly need to sleep. So I'm gonna stay for a little bit longer, and then I'll head off. But make sure you're subscribed and make sure you have your notification bells on, because you know what? My phone is never on silent when I sleep. I always sleep with one ear open. So if I hear the liquidation sounds, then I'll wake up and make content. Oh, did you know that yesterday President Trump said that he is a big crypto person? He's helped crypto more than anybody else. He's held crypto more than anyone else. He's a big crypto person. And let's play this clip because we couldn't highlight it on the Moon Show. Take a listen to what President Trump said last night with regards to cryptocurrency.
Crypto is a big thing, and they like it. A lot of people like it. The people behind it like it. My sons are handling that. My family is handling it. And I guess they get investments from different people, but I'm not. I have all I can handle right now with Iran and with Russia and Ukraine and with all the things we're doing. So I don't know exactly, other than, you know, I'm a big crypto person. I'm the one that probably helped crypto more than anybody.
Well,
and the reason I believe in it is because if we don't do it, Scott, I think we can say then China's going to do it. If we don't do crypto, then China's going to do it. And it's just like AI. We're leading AI by a lot. And if we...
It's a good story. I mean, I'll just say it's a good story to tell the press. Doesn't mean it's true, though. And I'll leave it at that. And then finally, Elon Musk tweeted about putting Dogecoin, or confirming that he wants to maybe put Dogecoin on the literal moon next year. Now, is this metaphorically saying that he thinks we're going to see altcoin season next year, or does it mean that he's going to put a Dogecoin on the moon because they're planning on going to the moon? I don't know yet. Now, usually when Elon Musk tweets about Dogecoin, prices fly. I mean, remember in the last bull market, he posted on February the 4th, 2021 about Dogecoin. The first 5 minutes, it went 2.9%. Then in the first hour, it went up 14%. And then on the day, it went up by 50%. Yeah, look, in a bear market, that's not how things react to. And we've said that, remember the Binance liquidation candles that took place on October the 10th? I mean, of course, you remember it. And then we saw this huge wick. We said that Dogecoin would actually come down and then end up closing that wick. So would a lot of other altcoins, and we have done that. And if you believe in Dogecoin in the long term, I still think that being Bitcoin heavy and stablecoin heavy currently makes sense, but now could be a slow DCA opportunity only if you believe in Dogecoin, and if you think that there's a little bit of a hint from Elon Musk, right? Who knows? But I do think that, if you're going to go into a meme coin, I think Dogecoin is probably the best one to go with. But yeah, guys, we'll continue the breakdowns tomorrow. If I continue talking, I'm just scared that I'm going to start speaking nonsense because my brain function is slowly capitulating. But thank you so much for watching. It's been great. And I'll see you guys tomorrow. And yeah, take care, everyone. Good night. And as always,